You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 18th of July, 2016. We always start with IYY, which was down on Friday, but we have seen the markets go up, go down, go up, go down, and go up again. Where are we on our weekly chart? Well, we are 2 weeks into a rise. We crossed over going up on the week beginning the 1st, the week ending the 1st of July was a very much a down week. But what was so odd about it is that the MACD bounced off the signal line on the 1st of July, and we had literally a continued up movement we saw over the next 2 weeks, the week ending the 8th and then the week ending the 15th of July, more strong up movement both weeks, and we actually ended the week down a little bit, 0.06% just on Friday, but it was a big up week. So we are in confirmed up moves on the long chart. That is the double long chart, the weekly chart on the total market is represented by IYY. Now, what do we see going on with the derivative oscillators? Well, they are positive. So we have confirmed up moves, big up moving candles, up moving MACD, and an up moving derivative oscillator. If we look at what happened in the overall market during the week, it was an up week starting on Monday the 11th up, Tuesday, Wednesday, Thursday, Friday. Now again, technically market down 0.06% on Friday, but when we make this kind of call, we're looking at the candlesticks that we use. They are different than your typical ordinary candlesticks, open, close, high, low. The Hinkin Ashi means average pace candlesticks, helps us see better flow patterns in the actual price movement. We still have a green open box candle even for the day on Friday. We see the derivative oscillator lost a little bit of speed. The MACD maybe moved a little bit closer, but still very far from the signal line. Strong up movement. We saw the market originally on the daily chart crossover going up on the 1st of July. It then slid sideways for 2 days, and on the 7th, it started its current rocket up. So that is where we are. Keep in mind over the course of the next week, the total market is in a confirmed up pattern. Does that mean it will keep moving up? No, but it means it will tend to move in that direction until there's enough weight in the smaller charts to pull the big chart over. So confirmed up moves on that big chart. Now we're going to go back to our weekly chart. We're going to take a look at the S&P 500. Technically, it was down for the day on Friday, 0.13%. But just like what we saw with the total market, it crossed over right around the 1st, confirmed crossing going up on the 8th. That is the week ending the 8th of July. And then 2 up candles for the last 2 weeks, the one ending on the 8th, the one just ending on the 15th of July. We have the derivative oscillator just went positive for the week ending the 15th of July. And if we look at the daily chart, we see, again, it crossed over going up back on the 1st of July, slid sideways for 2 days, and then has rocketed up since. Could be getting a little long in the tooth as far as that up goes, because it looks like for the last 2 days, it's held somewhere around 216. So that, again, we'll just continue to watch. Confirmed up moves. Derivative oscillator lost a little bit of energy on the daily chart. But again, when we start looking at these charts, we can see that that weekly chart has continued to move up and up over the last 2 weeks. So that's where the market will tend to go. That is where we are as far as the S&P 500 is represented by SPY. Now let's look at technology stocks, down 0.16% on Friday. But like the other 2 indexes, the total market and the S&P 500, it too crossed over going up back on the 8th of July. And we see derivative oscillator moved over at the same time. It's typically a good sign for a continuing pattern. And we have an up candle with a big up wick that first week ending the 8th of July, and the past week that just ended the 15th of July, a big up candle with just a little wick on top pushing through the top Bollinger Band, derivative oscillator in the positive, MACD in the positive. Let's take a look at what occurred over the course of the daily chart. It crossed over going up back on the 1st of July, slid sideways just like the other charts did, the 5th and 6th, and then rocketed up. A little bit of a pullback on the charts around the 13th, and up movement in the morning and in the afternoon, but hovering somewhere around the 112 mark. Again, derivative oscillators losing some of its speed on the daily chart. Weekly still in a confirmed up position, as is the daily. So again, just remember the markets are going to continue to move in the direction of the big chart. Have we topped out yet? My friends, it is an election year. Several of you have been writing me as we've been talking about the Stock Traders Almanac for 2016. You need to get it. You need to read the section on presidential cycles. Yes, July is many times a down month. However, it's literally a month where there's not a lot of action typically in the market because so much of the volume's out of the market. There may be some movement, but not huge volume movement. Now, the one thing that we need to pay real close attention to is this presidential cycle. What is that all about? Well, as you'll learn when you read the Stock Traders Almanac 2016 edition by Jeff and Yale Hirsch, you will see that presidential cycle typically means an up market. I think 14 out of the last 16 presidential elections, up market, 14 of those. Because why? Well, presidents want to go out on a bang. I don't really know, but the market tends to go up in an election year. After the election year, tends to go down, particularly in that second year of the new president when all the new policies are coming in. That might be the reason. So again, watch. Let the charts direct what you do. Now, before we get to the news, the last thing we're going to look at is gold. What is going on with gold on our weekly chart? Well, gold crossed over going up back on the 24th of June, and it's continued to move up as far as price movement until this last week. We have what we call a spinning top. Lots of indecision in gold. Still in a confirmed up move. Derivative oscillator actually gained steam. The MACD kinked over, coming down, at least the MACD itself. The signal line's continuing to move up. So some hesitation in the gold price. Continue to watch that. Remember, gold typically moves inverse to the market, although on Friday, gold was down 0.38%, as were the other indices down, smaller amounts. Gold was down the most. So keep an eye on gold, still in a confirmed up move, but some hesitation with this spinning top, indecision, a red open box spinning top. Again, more upper movement than downward movement, so that's because we have a higher wick on top, but just continue to pay attention, keep that in the back of your head, mark that on your charts. And when I say mark it on your charts, what am I talking about? Well, we have our daily market worksheet, and it is available at the website. It's available on the email. You can find it on Facebook, everywhere we're posting it. It is our daily market worksheet. You can print out as many as you want. It's a PDF. And as you follow along with us or on your own, you can fill out the sheet and use it to help you track what's going on, to put pen to paper. Now, a lot of people, I just want to do stuff on my computer. That's great. I love doing that, but there's nothing like the tactile response of putting things down on paper so you can actually see it and keep up with it. I like it. You don't have to do it, but if you want to, it is available for you. Now, let's step away from the charts for just a bit and talk about things that affected the market over the last week. What did we see? Well, global equities did rally. They rallied on hopes of what? Future global monetary and fiscal stimulus. Isn't that great? It's not that the economies in the world are doing great. People are going back to work. We have new technologies that are bringing more productivity and wealth. No, no, no. We want more free money. Well, the Bank of England did not cut their rate as was expected. They indicated they'll probably be easing policies that'll be kicked in later. We also saw Japan. Well, Japan, they just keep throwing money at things. The Prime Minister has said that he wants 10 trillion yen in physical stimulus in a new package to boost domestic demand. Oil prices edged up during the week, and we saw the VIX, that is the volatility index, declined a little bit from 13.68 to 12.52. We also saw the yield on the 10-year Treasury rose to 1.58 from about 1.40. Now, what's interesting in the U.S., the June U.S. retail sales were brisk. The United States noted that it rose 0.6% in June, and May sales were actually revised down to 0.2%. They were initially reported at 0.5. Isn't that interesting? So what happened? Did people push off buying things? Who knows? The UK Conservatives settled, of course, on a new leader. That's Ms. May. She's taken over. Japan seeks to spur growth, as we talked about before, with that 10 trillion, which is 10 trillion yen is $100 billion. That's just unbelievable, isn't it? Now, oh, and another interesting thing, China maintained its 6.7% growth rate in the second quarter. How did they do that? Well, they also put lots and lots and lots of money in fiscal stimulus. Just print money to grow your economy. Isn't that the way you do it? Didn't work too well for the Weimar Republic in Germany right before World War II, did it? Well, Irish GDP also jumped up quite a bit. That's interesting. When they look into it, though, it looks like there's a spate of corporate inversion deals going on over there. And for tax purposes, foreign firms are moving their headquarters and aircraft leasing assets to where? A tax-friendly haven like Ireland. Again, wow, isn't that great? Instead of cutting taxes and stimulating your economy with business, print money and let all those businesses move to a place like Ireland. Oh man, come on, folks. Well, let's talk about what's going to affect the economy over the next week. Not a whole lot of stuff going on. On Thursday, the 21st of July, the UK is going to report its retail sales, and then the European Central Bank's Governing Council is going to meet on Thursday also, and then Friday, the Global Flash Purchasing Managers Indices. So not a lot going on news-wise. Now, when you hear me complain about what's going on and how things are being pumped up, again, that leads us continually into the discussion of what happens when all those birds come home to roost. My friends, this is why you need to learn to read a stock chart. You can make money when the market's going up. You can also preserve your capital and or make money when the market goes down. You have a couple of ways you can do it. You can jump in when you know how to read a chart and make money when indexes are going up, gold's going up. But when the economy tanks and things start to crash, you can pull your money out, okay, and let the market crash and then buy things back cheaply. Or you can look for vehicles that will make money when things go bad in the economy. Maybe gold, maybe other commodities. Maybe you want to buy an inverse fund for a short period. We have a great teaching on inverse funds, how to make money when markets crash. Please listen to that at the website. So much information you need to get while the getting's good. When there's blood in the streets, it's going to be very hard for you to figure out what's going on. That's why I'm working so hard, producing so much information, being here every day, helping you learn to follow these markets. Learn how to do this. It's the most important thing you can do for dark days ahead. If you think printing money out of thin air and economies being stimulated by free stuff without productivity is going to be a winning game plan, I believe you should go buy yourself some swampland and pray over it that it's going to go up in value. It's just not, it's a non sequitur. It does not follow that by doing what we're doing in our world economy, things are going to work. So what do? You make money in the market as it's inflating. That's the reason it keeps going up. It's inflating. As they print more money, real stuff like stocks, gold, they actually can have value. Now, they can also be manipulated and monkeyed with too and driven down any number of things. That's why you got to be able to read a chart so you don't get screwed. But once you get good at reading a chart, when things really do roll off on the deep end, you'll be ready. You will have practiced all of these trades, these investing times over and over and over. You'll have your virtual account, which we tell everybody to set up for free at any of the online brokers. We're not telling you to go somewhere. We're not telling you to use real money. We are not in any way a financial advisory firm, an investment firm. We're nothing but an education company. We're trying to educate you to learn how to read these charts so that you can make your own decisions later when you get good enough in how to read these charts and make these things work. That's what we're all about, and we appreciate you being with us every day. You appreciate what we talk about and what we're trying to do. Help us spread the word to other people. Share this with your friends. Share this with your neighbors. Share this with your family. Okay, and also say nice things about us if you would. Subscribe to our YouTube channel. When we hit 1,000 subscribers, we know we have thousands listen every week, but 1,000 subscribers, when we hit that magic mark, we can start doing proprietary broadcasts right to our subscribers. So please go there to YouTube, subscribe to our channel. Second, go to iTunes, subscribe to our channel there, and if you do anything, please give us a 5-star rating and say something nice about us. Helps us with the metrics, and it brings more people in so we can share more information. Folks need to know what's going on. They need to learn how to read these charts, and they need to protect themselves. Thank you so much for being with us. We appreciate you. We love to hear from you. Follow us on Instagram, Facebook, Twitter, YouTube, you name it, iTunes. We are there. And our website where you can get all of our training. You can sign up for our newsletter. When we produce training, it comes out to you also. That is chartingwealth.com. God bless you. Hope you have a great week learning the market.